A profound shift is underway in the global financial landscape, one that is challenging the established order and empowering individuals in unprecedented ways. At the heart of this transformation lies Bitcoin, the decentralized digital capital system that has captivated the attention of investors, technologists, and, increasingly, governments. While national governments grapple with the implications of this monetary innovation, a growing number of states within the United States are taking a proactive approach, recognizing Bitcoin's potential to enhance their economic competitiveness and provide their citizens with greater financial autonomy. This nascent trend of state-level Bitcoin adoption is not merely a technological curiosity. It represents a fundamental reassessment of the role of money in society. For decades, the global financial system has been dominated by centralized institutions, leaving individuals and businesses at the mercy of opaque policies and arbitrary decisions. Bitcoin, with its decentralized and transparent nature, offers a compelling alternative, one that empowers individuals by giving them direct control over their financial assets. The appeal of Bitcoin to states goes far beyond its technological novelty. In an era of economic uncertainty and geopolitical instability, Bitcoin represents a hedge against inflation and a store of value that is resistant to government manipulation. Moreover, its decentralized nature makes it resilient to censorship and seizure, ensuring that individuals can transact freely and securely, regardless of their location or political affiliation. As the world grapples with the challenges of a rapidly changing economic order, Bitcoin is emerging as a beacon of hope and opportunity. States that embrace this transformative technology will be well positioned to thrive in the decades to come, while those that cling to the old ways risk being left behind. The quiet revolution is underway, and the future belongs to those who are bold enough to embrace it. The movement towards state-level Bitcoin adoption is gaining momentum, with several states leading the charge in enacting legislation that recognizes and supports the use of this innovative technology. Oklahoma has emerged as a pioneer in this regard, having introduced several bills aimed at creating a more favorable regulatory environment for Bitcoin businesses and users. These initiatives signal a growing understanding among policymakers of the transformative potential of digital currencies and their role in shaping the future of finance. Texas, a state renowned for its independent spirit and embrace of innovation, has also taken significant strides in positioning itself as a hub for Bitcoin and blockchain technology. Under the leadership of Governor Greg Abbott, Texas has implemented policies that encourage Bitcoin mining and establish a strategic Bitcoin reserve, says Senator Charles Schwertner, recognizing the industry's potential to create jobs, boost the economy, and enhance the state's energy grid. Texas State Senator Charles Schwertner has introduced a bill in the new legislative session to establish a strategic Bitcoin reserve in the Lone Star State. It's time for Texas to lead the way in establishing a strategic Bitcoin reserve, the Republican politician and physician said while announcing the Senate bill SB 778. The influx of Bitcoin miners to Texas is a testament to the state's forward-thinking approach and its commitment to fostering a climate that is conducive to technological advancement. Other states are following in the footsteps of Oklahoma and Texas, introducing legislation that seeks to clarify the legal status of Bitcoin, streamline regulations, and attract businesses operating in the digital asset space. Pennsylvania, for instance, has proposed legislation that would exempt Bitcoin from certain financial regulations, recognizing its unique characteristics as decentralized digital property. Meanwhile, Ohio has taken steps to allow businesses to pay taxes in Bitcoin, signaling a growing acceptance of digital currencies as a legitimate form of payment. These pioneering efforts by Oklahoma, Texas, and other states are laying the groundwork for a future in which Bitcoin plays an increasingly prominent role in the U.S. economy. By creating a more favorable regulatory environment and fostering innovation, these states are attracting investment, creating jobs, and positioning themselves at the forefront of the digital asset revolution. As more states recognize the transformative potential of Bitcoin, we can expect to see a wave of legislation that further accelerates its adoption and integration into the mainstream financial system. The narrative surrounding Bitcoin mining has often been marred by concerns over its environmental impact, particularly its energy consumption. However, a closer look at the industry reveals a very different story. one characterized by innovation, sustainability, and a commitment to environmental responsibility. Texas, with its abundance of renewable energy sources and business-friendly environment, has become a hotbed for Bitcoin mining operations that are leading the charge towards a greener and more sustainable future for the industry. One of the key drivers of this transformation is the increasing use of renewable energy sources, such as wind and solar power, to power Bitcoin mining facilities. Texas, in particular, has seen a surge in the development of wind and solar farms that are specifically designed to cater to the energy needs of Bitcoin miners. This symbiotic relationship benefits both industries, providing renewable energy producers with a steady stream of revenue and enabling Bitcoin miners to reduce their carbon footprint. Beyond the shift towards renewable energy, Bitcoin miners are also implementing innovative technologies and practices to minimize their environmental impact. For example, many mining facilities are now utilizing advanced cooling systems that reduce energy consumption and water usage. Others are exploring the use of waste heat generated by mining operations to heat homes and businesses, further reducing their overall environmental footprint. The emergence of green Bitcoin mining in Texas is a testament to the industry's ability to adapt, innovate, and evolve in response to environmental concerns. As the industry continues to mature and adopt more sustainable practices, the narrative surrounding Bitcoin mining will undoubtedly shift, revealing its potential to not only revolutionize finance, but also contribute to a cleaner and more sustainable energy future. While states are laying the groundwork for Bitcoin adoption, the corporate world is not standing idly by. MicroStrategy, a business intelligence firm led by Bitcoin advocate Michael Saylor, has made a bold bet on Bitcoin, amassing a significant hoard of the digital asset on its balance sheet. This strategic move has sent shockwaves through the financial world, challenging conventional treasury management practices and signaling a growing acceptance of Bitcoin as a legitimate store of value among institutional investors. MicroStrategy's Bitcoin accumulation strategy is not driven by speculation but by a deep conviction in the long-term value proposition of the digital asset. Saylor views Bitcoin as digital gold, a scarce and durable asset that offers a hedge against inflation and the debasement of fiat currencies. By converting a significant portion of its cash reserves into Bitcoin, MicroStrategy is essentially taking a long-term bet on the future of digital assets and positioning itself to benefit from their anticipated growth. The implications of MicroStrategy's actions extend far beyond the company itself. By embracing Bitcoin as a treasury asset, MicroStrategy is blazing a trail for other corporations to follow. As more companies recognize the potential benefits of holding Bitcoin on their balance sheets, we can expect to see a wave of institutional adoption that will further fuel demand for the digital asset and drive up its price. MicroStrategy's bold bet on Bitcoin is a sign of the times, reflecting a growing recognition among institutional investors that the traditional financial system is no longer fit for purpose. As the world grapples with the challenges of inflation, economic uncertainty, and geopolitical instability, Bitcoin is emerging as a viable alternative, one that offers a hedge against systemic risk and the promise of a more equitable and decentralized financial future. One of the key factors driving Bitcoin's value proposition is its inherent scarcity. Unlike fiat currencies, which can be printed ad infinitum by governments, Bitcoin has a fixed supply cap of 21 million coins. This limited supply, coupled with growing demand from individuals and institutions, is creating a supply squeeze that is putting upward pressure on Bitcoin's price. The concept of scarcity is deeply ingrained in economics. Simply put, when the supply of a good or asset is limited and demand is high, its price tends to rise. This principle is particularly relevant to Bitcoin, which has a mathematically enforced scarcity that cannot be manipulated by any government or central bank. As more people recognize Bitcoin's value proposition as a store of value and a hedge against inflation, demand for the digital asset continues to grow. However, due to Bitcoin's fixed supply, this growing demand is not met with a corresponding increase in supply. This dynamic creates a supply-demand imbalance that inevitably leads to price appreciation. Furthermore, the process of Bitcoin mining, which is essential for securing the network and verifying transactions, becomes increasingly difficult over time. This difficulty adjustment ensures that new Bitcoins are created at a predictable and decreasing rate, further exacerbating the supply squeeze. As the rate of new Bitcoin entering circulation slows down, the existing supply becomes even more valuable. Bitcoin's scarcity is not a marketing gimmick, it is a fundamental feature of its underlying technology. This inherent scarcity, coupled with growing demand, is creating a perfect storm that is driving up Bitcoin's price and attracting the attention of investors worldwide. Beyond the fundamental drivers of supply and demand, technical factors are also at play in the Bitcoin market, creating the potential for explosive price movements. One such factor is the so-called Vanna-Gamma squeeze, a complex interplay of market dynamics that can lead to rapid and significant price surges. Vanna and Gamma are options market terms that describe the sensitivity of an option's price to changes in the underlying asset's price and volatility. In simplified terms, when the price of Bitcoin rises, Vanna and Gamma increase, creating a feedback loop that can amplify price movements. As the price of Bitcoin rises, options traders who have sold call options, bets that the price will go up, may be forced to buy Bitcoin to hedge their positions. This buying pressure further pushes up the price, triggering more call option buying and creating a self-reinforcing cycle of price appreciation. The Vanna-Gamma squeeze is a technical phenomenon that can occur in any market, but it is particularly potent in the Bitcoin market due to its relatively small size and high volatility. When a Vanna-Gamma squeeze is triggered in the Bitcoin market, it can lead to rapid and dramatic price surges, as we have witnessed in the past. While the Vanna-Gamma squeeze is a complex topic, the key takeaway is that it highlights the potential for explosive price movements in the Bitcoin market. As more institutional investors enter the market and options trading volume increases, the likelihood of a Vanna-Gamma squeeze being triggered also increases, creating the potential for significant price appreciation. The growing adoption of Bitcoin by individuals and corporations is gradually shifting the perception of the digital asset from a speculative investment to a legitimate store of value and a potential reserve asset. This paradigm shift has profound implications for the future of finance, challenging the dominance of fiat currencies and paving the way for a more decentralized and equitable financial system. Historically, reserve assets have been held by central banks and governments to support their currencies, manage exchange rates, and provide a store of value. Gold has long been the preferred reserve asset due to its scarcity, durability, and universal acceptance. However, Bitcoin is increasingly being seen as a viable alternative, offering several advantages over gold in the digital age. One of the key advantages of Bitcoin as a reserve asset is its divisibility, portability, and security. Unlike gold, which is difficult to transport and store securely, Bitcoin can be transferred instantly and securely anywhere in the world with an internet connection. This makes Bitcoin a more practical and efficient reserve asset for the digital age. Moreover, Bitcoin is not subject to the same geopolitical risks as gold. While the supply and price of gold can be influenced by government policies and global events, Bitcoin is decentralized and borderless, making it resistant to censorship and confiscation. As more investors and institutions recognize the potential benefits of Bitcoin as a reserve asset, we can expect to see a gradual shift away from traditional reserve assets like gold and towards digital assets. This trend will further fuel demand for Bitcoin and solidify its position as a leading store of value in the 21st century. The rise of Bitcoin and other cryptocurrencies is not merely a technological disruption, it represents a fundamental shift in the way we think about and interact with money. As the world becomes increasingly digital and interconnected, the centralized financial system of the past is proving to be inadequate and unsustainable. Bitcoin, with its decentralized and transparent nature, offers a compelling alternative, one that empowers individuals and fosters greater financial inclusion. One of the key benefits of a decentralized financial system is its ability to reach the unbanked and underbanked populations of the world. According to the World Bank, nearly 1.7 billion people worldwide lack access to formal financial services. Bitcoin and other cryptocurrencies have the potential to bridge this gap by providing a secure and accessible way to store, transfer, and receive value, regardless of location or financial status. Furthermore, a decentralized financial system is more resilient to censorship and manipulation. Unlike traditional financial institutions, which can be influenced by governments and other powerful entities, Bitcoin and other cryptocurrencies operate on decentralized networks that are resistant to control by any single entity. This ensures that individuals have greater control over their finances and are not subject to the whims of centralized authorities. The future of finance is one that is decentralized, inclusive, and empowering. Bitcoin is paving the way for this future, providing individuals with the tools and technologies they need to take control of their financial well-being and participate in a more equitable and just financial system. The convergence of state adoption, green mining, and a shrinking supply is creating a perfect storm for Bitcoin, propelling it towards mainstream acceptance and solidifying its position as a leading store of value in the 21st century. As more individuals and institutions recognize the transformative potential of this revolutionary technology, we are witnessing the dawn of a new era in finance, one that is characterized by decentralization, empowerment, and unprecedented opportunity. The path forward for Bitcoin is not without its challenges. Regulatory uncertainty, volatility, and the need for further technological development are all hurdles that must be overcome. However, the momentum behind Bitcoin is undeniable. The genie is out of the bottle, and the traditional financial system can no longer ignore the transformative power of this decentralized digital currency. As we stand on the cusp of this new era, one thing is clear: Bitcoin is here to stay. Its impact on the world will be profound, reshaping not only the way we think about money, but also the very fabric of our society. The future is bright for those who embrace this revolution and seize the opportunities it presents.
What happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce we bought it, we're not ashamed of it, we're going to buy more? Bitcoin goes to the moon. Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset, it's called Bitcoin, right? Right? There's no second best, okay? It's not like Google and Facebook. Name for them, we call them poor. Take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. The point is, if you have the superior asset, it's going up forever.
It will be the policy of my administration, United States of America, to keep 100% of all the Bitcoin the U.S. government currently holds or acquires into the future. We'll keep 100%. I hope you do well, please. This will serve in effect as the core of the strategic national Bitcoin stockpile.